Great. Well, thanks so much, David. Great to be here as always. Thanks to everybody for joining. Promise to make it worth your while. We'll spend about an hour together today, and I'm going to be revealing how to forecast market direction up to 3 days in advance. I'll also be revealing my Slingshot strategy. So we're going to look at a couple very powerful indicators, and we're going to do our best to throw out all the lagging components that most of us have attempted to use and probably over the long term unsuccessfully. So we're gonna transition here to I think a much more effective approach. So a lot of great stuff to reveal today. Before I do that, I'll read you a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Of course, need a broker to trade securities and options and must meet suitability requirements. We will be going over some various results on our session today, and I'll actually be sharing real-world, real money results out of my own personal trading account. And the purpose of that is really just to back up everything that I'll be teaching on the session today. But just know that anything that I do share due to the time-critical nature of trading, brokerage fees, activity of other traders, etc., don't guarantee anyone will mirror the performance. All right, so we're going to actually start out by talking about why the market is so difficult to trade. And there are, of course, a range of different factors that make trading and investing difficult. But if we boil it down, a lot of it really comes down to psychology. And this is an interesting psychological curve as it relates to the financial markets that I'll walk you through, and then we'll dive deeper into how to overcome these challenges that we all face. Okay, and so starting on the kind of the left of this curve, when we enter a trade or investment, right, we're typically going to do so with some degree of optimism or enthusiasm or even exuberance, right? We wouldn't get into the trade otherwise. We expect it to work out in our favor. Now, interestingly, if you correlate this emotion and the timing of when we tend to get into a trade, you'd be surprised to find it's often when there's a high level of financial risk in the markets, and it may not actually be the appropriate time to place a trade, right? Now, for anyone who's been involved in the markets for any period of time, you've almost certainly experienced that optimism, enthusiasm, and exuberance transitioning to anxiety, denial, fear, despair. And this is where you get panic selling. Okay, so when a position moves against you, you're faced with uncertainty, and all these psychological factors start to come into play, and you'll typically get panic selling. And this might actually be the best time to trade and invest. That cycle can then transition into renewed hope, relief, optimism, and it repeats itself over and over again. And it's very hard to break out of this. Okay, unless you use what's called a contrarian approach. Okay, so there's a reason that your Warren Buffetts, Carl Icahns, George Soroses of the world have been consistently successful over many decades and are now considered some of the not just the most successful traders but richest traders on the planet. And they all use contrarian approach. Okay, that's what we're going to do with the Slingshot strategy. But let's talk a little bit more about psychology of failure. I think it's important to have this kind of baseline understanding of why this is a difficulty for us. Because anytime we enter a directional trade, our goal is to buy low and sell high. But unfortunately, that goes against our human instinct. So instead, when a security's gone down, we tend to sell it. And when it's already gone up, we tend to buy it. Okay, and now is a great example of that. So we just recently saw a tremendous market crash back in March and April, followed by a tremendous rebound in the market. Okay, and with markets now putting in new all-time highs. And that's where this psychological process starts to come into play, right? Do we jump in now? There's all the uncertainties. Are we going to jump in too late and then the market's going to sell off? Okay, because when that happens, we panic, right? We panic when prices falling because we're afraid of losing money. Nobody wants to lose money. But then we buy when it's rising because we're afraid of missing out. It's a FOMO mentality. And then to compound that problem, we're wired to repeatedly make the same mistake. So we'll buy high and sell low because that's what our emotions tell us to do. Okay, and without a solid trading plan, we're vulnerable to our emotions. In addition to that, if you lack a strategy that can identify momentum shifts, which means that you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. And experienced traders and investors can face the same challenge. Okay, so we're going to turn the tables today. And instead of being greedy when there's a high level of financial risk and fearful when it might actually be the best time to trade or invest, right, we're going to do the opposite. Okay, for any of you Seinfeld fans out there, you might be familiar with that episode where George Costanza does the opposite, right? Nothing is working out for him, so he just simply does the opposite, and everything starts to go in his favor. Okay, well, that's kind of how a contrarian approach works. It's that old Warren Buffett adage: "Be fearful when others are greedy." Okay, and that's what he does. And if you ever have wondered, and we're going to look at some charts on our session today, why the market rebounds so dramatically after such a significant sell-off. Okay, this is the reason for that. Okay, these contrarian traders and investors are taking advantage of the panic selling. Okay, so what I'm going to give you today on the session to make this easier, you're going to discover the slingshot setup that has worked 100% of the time. Now that's a bold claim, but if you apply this slingshot strategy to the major market indices, the S&P, the NASDAQ, okay, this plays out with 100% accuracy. Okay, going all the way back to the dawn of the stock market. And again, we're going to look at some charts to demonstrate that. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, we're certainly not going to be trying to pick an exact bottom or top to the penny, but we can get remarkably close, and I'll show you how to do that. How to apply this setup to any market in any time frame. So this is completely fractal in nature. You can apply this to a futures contract, a forex pair, your favorite stock, an ETF, right, and as well as any time frame. Okay, because it's all based on market psychology, and that's ultimately what drives markets, right? It's like any other market, financial market, right? It's supply and demand. Okay, and that supply and demand is driven by fear and greed. We'll look at a really simple tactic to help eliminate losing trades. This is a highly underutilized method to if you're going to place a directional trade, right? To help weed out bad opportunities. Okay, we'll look at some actual trade examples, and then stick with me to the end. I'll show you how you can copy my success and get the trade signals that I use to make a living in the markets. I do trade for a living. I will be giving you a little bit of background on myself in just a minute. But first, let's imagine if you could buy low and sell high without any guesswork. So all too often we use some degree of guesswork or intuition in our trading decisions. We want to try to remove that as much as possible. Why? Because of what we just looked at as it relates to the psychological curve and that the drawbacks we face there when our emotions come into play when making trading decisions, right? But there's actually one volatility study that has made this possible since the beginning of the markets. And it's a unique setup that I call the slingshot that has allowed traders to buy low and sell high with 100% accuracy. So again, once you understand this strategy, you can apply it to the S&Ps, you can apply it to the NASDAQ, okay? And you'll see that, again, going all the way back to the dawn of the stock market, go back as far as you can on your stock charts. And this plays out with 100% certainty. It also warns of potential market sell-off. So this alone is worth its weight in gold, right? Because once again, and please keep this psychological curve in mind as we progress through our session today. That's the fear component. Okay, so if you could remove that fear of when markets might be vulnerable to a sell-off, okay, imagine the difference that could make for you. You can, if you have a retirement account, an IRA, a 401k, and you're holding long positions in the account, and you're worried about a market crash, okay, you can hedge those positions. You can, book profits and wait it out until the market rebounds. All these things. You can speculate on bearish positions. Okay, but once these bands of the market can't be stretched any further, they have to bounce back. It's an inevitability in markets. It's how volatility works in the financial markets, and it has to play out for there to be movement in price. Okay, so this rubber band effect makes it possible to accurately identify tops and bottoms in the market. Let's start to look at some charts. And so when I demonstrate the slingshot, right, I'm going to pick some of the worst periods in the market that we've encountered. I certainly could use the one that we've just seen this year, and we'll look at that here momentarily. But I'm going to go back to early 2020, okay, during the COVID crash, because this was largely an unforeseen catalyst, right? If you just back up to, let's just say mid 2019, nobody had any idea this was coming, okay? So it wasn't until later in 2019 when this catalyst started to reveal itself, and then all this uncertainty surrounding it. And let's look at this. This is a daily chart, okay, of the S&P 500. Let's look at this chart and see what's going on in terms of the price action. So if you look at the left edge of the chart, okay, at this point in time, S&Ps are putting in new all-time highs. Now, once again, tie this into that psychological curve. What's going on amongst the retail trading crowd. They have FOMO mentality. They, may have missed out on this prior decade-long secular bull market, or maybe they participated and they're wondering, should I add to position? Should I book profits? And if they didn't participate, is it too late to jump in? How much higher is the market going to go? Okay, these are all psychological questions that create uncertainty. Okay, now when we look at this from a contrarian perspective, okay, so again, this is your Warren Buffett, right? Is he going to be buying in up at these price levels? No, probably not. He already bought in at much lower prices. Okay, so this is actually where we want to look at selling. So again, that could be booking profits. It could be initiating speculative bearish positions when most other traders are buying. Okay, the bulk of the retail crowd is going to be jumping into the game too late here. Now, we all know what happened, right? The S&P sold off over 30% in just a few weeks. It was a massive crash in a short period of time that interestingly created tremendous opportunity. Okay, so imagine what's happening there in late February, early March, right? Panic selling, heavy losses being taken. In fact, I'm a hedge fund manager. Again, I'll give you some background on myself here momentarily. I had just recently launched my new fund, and I had noticed that other fund colleagues of mine, their funds were going under. They'd been around for years. Okay. And there was an unprecedented number of hedge funds that got wiped out in this crash due to margin calls, being over leveraged, all these things. Okay. But it created buying opportunity. So when most other traders are panic selling, buyers came in. Okay. The S&Ps caught a bid and they rallied right back up to that initial sell-off level. Okay, that's where we want to look at taking profits. So we're going to come back to that chart in just a minute. We're going to apply the slingshot to that. I'll show you how you could have identified when the market is likely to sell off, as well as rebound. All right. So again, I'm Jeff Tompkins. It's great to have everybody here today. Just a brief background on myself. I have over 2 decades of experience trading the stock options and futures markets. Received my professional training at Morgan Stanley as an intern at the trade desk back in the early 2000s. And about 10 years ago, founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. Also a hedge fund manager, as I mentioned. I manage money for my clients at Altos Capital. The slingshot is actually one of my core strategies, and one that I credit along with some of the indicators that I'll be sharing with you on the session today for the tremendous success we've had in the fund. We've never had a negative year. Again, we traded through the COVID crash, traded through the bear market of 2022, recently traded through the tariff crash, and have come out ahead. Okay. And so again, I credit a lot of what I'll be sharing on the session today with you to that. Okay. I'm also the founder and creator of the Trade Trend Signal software, which I'll be talking to you about on the session today as well. So by the end of our session, you're going to discover one trade setup that has never failed, going back to the beginning of the market. So it's so reliable. It's worked 100% of the time on the major indices. Okay. It hasn't failed once, even in this year in the tariff crash. Okay. Even in the Corona crash, even in the 2022 bear market. It happens repeatedly with astounding predictability. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. Okay, it's critical that you have this as markets become more volatile, more erratic, and less predictable. Now, you're going to discover why volatility is one of the only leading indicators of market direction. How to identify when markets may be vulnerable to a sell-off. And this alone can completely turn your trading around. Remember, it helps remove that fear component from your trading decisions. How to identify when the market is likely to go up. How to determine exactly how far the market is likely to go up. So this helps solve what we call the trader's dilemma, right? You're in a successful trade. It's going in your favor, but when do you get out of it before the market inevitably reverses on you and you watch those profits evaporate or even worse, turn into a loss? How to get your hands on a tool that will change your trading forever. So this is another bold claim, and I realize I make a couple of bold claims here, but this is purely based on my personal experience. It's changed my trading forever. And my hope is that it will do that for you as well. So let's start out by imagining a slingshot. Why do I call this the slingshot strategy? Well, as the slingshot's pulled back, muscle energy is transferred to elastic energy in the bands of the slingshot. Now, after the slingshot is released, the elastic energy is transferred to the stone as energy of motion. We call this kinetic energy in physics, right? And that's about as deep into physics as I'll get because I'm not a physicist, but I do have physicist envy and find it fascinating. But it kind of plays out, this principle kind of plays out in the financial markets in the form of supply and demand. So, right, when we get demand, there's buying pressure, right? And that propels markets higher. And that is what creates directional trends. And those trends will persist for a period of time until that supply demand curve shifts. Okay. And it's that, so again, going back to physics, right? It's the an object in motion stays in motion until something, right, stops it. Well, this is supply and demand. Now, once the bands become overstretched, it's going to give us a buy signal. Okay, and then we can enter the market with high confidence that prices will go up to the initial resting point of the band. So we're going to apply this using volatility. Okay, so some volatility analysis and an indicator called the Bollinger Bands. Okay, so the volatility bands are going to tell us when prices move too far from the mean or the average and is likely to reverse direction. Now, the Bollinger Bands are available on virtually any retail broker or charting platform. Okay, it's a freebie indicator. Like any other indicator, there's a multitude of ways that it can be used and applied to trading and investing decisions. And unfortunately, most of them don't work. They're not effective, right? But when you understand how to apply the slingshot using the Bollinger Bands, right, it can be remarkably accurate and it can pinpoint turning points in a security, okay, with astounding accuracy. Okay, so let's just visualize what that is. You can see I've got a chart here in the center screen. Doesn't matter what it is. It could be, again, a Forex pair, a futures contract, could be your favorite stock. So I just want to point a couple things out, and we're going to start to dive deeper here. So you'll notice price recently rotated on the left edge of that chart off the upper Bollinger Band down into the lower Bollinger Band. Okay, when I say upper and lower, I'm just referring to the outer bands. Okay, so there's three lines, and if you're not familiar with the indicator, I'll give you kind of a high level overview of what it is in just a minute. But for now, just visualize. Okay, price breaches the lower band. What follows? A sell-off. Okay. Now, eventually, there's that shift in the supply-demand curve. So it creates that sell-off creates enough demand to attract buyers who come in. Again, whatever this asset is, catches a bid and is trading right back up to where that initial volatility expansion level occurred. Okay, so take kind of a mental snapshot of this. This is what the slingshot looks like. We'll dive deeper in just a minute and look at some more charts. But if you're not familiar with the Bollinger Bands, again, I'll give you a high-level overview. They consist of three lines, as you see there on the chart. We take a simple moving average of the securities price. Okay, that's the center line that you see there. Then we take a standard deviation of the securities price. Now, standard deviation is just a mathematical measurement of average variance. But the important thing is that it measures how spread out numbers are from an average value. Okay, and I won't go into the calculations of it, because you don't need to calculate it, right? The indicator does that for you. But the important thing to know is that because standard deviation is a measure of volatility, when the market becomes more volatile, the bands widen. Okay, so the outer bands, the upper and lower band, they'll widen. And when the market becomes less volatile, the bands will contract. Okay, so they'll be more narrow, closer together. Now, like most indicators, there are input settings, right? And most platforms will default to the settings I have here on the screen. If not, you can change them. But these are the settings that I use, which are a 20-period SMA or simple moving average and a 2 standard deviation setting for the outer bands. Okay, so that simply means that the outer bands are 2 standard deviations away from that center band. Okay, that's important. Now, as I mentioned, there's a multitude of ways that you can use the Bollinger Bands. Right? You give it to 10 different traders, it'll probably be used 10 different ways, like most indicators, right? Well, look at some of the common ones. So one is to buy at the bottom band and sell at the top band. Now, the problem with this approach is that price can hug the upper or lower band for extended periods of time. Okay, so this might work well in a narrow ranging market environment. And then when there's a range breakout and the market goes into a strong directional trend, this approach can fail, right? So you can have maybe a series of successful consecutive winning trades that are then wiped out by one bad one. So we're not going to use that approach. Another is band contraction and expansion. Now, band contraction and expansion is important as it relates to the slingshot. Okay, we are going to incorporate this into the slingshot strategy. because it can be a good indicator of an impending big move in a security. But the problem is with using it as a standalone approach is that we don't know in which direction the move will occur. Okay, so we're not going to use this as a standalone approach. Another is to buy or sell at the middle band. Now, this is what we often call a mean reversion strategy. Okay, and this can work well in strong trending markets, but it can fail in sideways ranging markets. So kind of like the opposite of buying at the bottom band, selling at the top band. And so for that reason, we won't use that approach. Now, the slingshot is a unique method where we wait for the lower band to break, and I'll explain what that means momentarily. But price will hug that lower band and ultimately rebound to where the breach initially occurred. Okay, this is the slingshot, the essence of the slingshot. And we'll again look at some charts to and walk through every step to visualize this. Okay, so again, the Bollinger Bands, it's a common indicator. It's been, I think, John Bollinger introduced these back in like the 50s or so. But he really designed these to give traders a higher probability of identifying when an asset is oversold or overbought. So kind of as a oversold, overbought oscillator. We're going to use it in kind of a different, unique way, as I mentioned, as it relates to the slingshot. So the Bollinger Band slingshot. Price can exceed or hug a band envelope for prolonged periods during strong trends. Okay, and again, we'll visualize this on the chart. What we're going to do is wait for the lower band to break and then wait for a buy signal. And then we're going to exit when price returns to the breaking point. Okay, so we know precisely when the asset is likely to sell off. Okay, we're going to wait for that buy signal. And then if we go long, we're going to know precisely where to take profits. Okay, no guesswork. Now, I pointed out the slingshot occurs with astounding predictability. In fact, you can go all the way back to the dawn of the stock market, okay? And the major market indices have returned to the initial volatility breakout with 100% accuracy. So that includes the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the '08 mortgage crisis when markets lost more than half their value in the second half of the year, the 2000 dot-com bubble, the recent corona crash, every black swan event, market correction, major crash, bear market, you name it, this happens, including the recent tariff crash. Okay, so let's now dive a little bit deeper. I told you we come back to this daily chart of the S&P 500 index. We now have the Bollinger Bands plotted. Okay, so I'm going to show you how to identify these things. There's a couple key points that you need to understand. Now, as we walk through this, keep that psychological curve in the back of your mind. If we look at the left edge of the chart, okay, what do we know is happening at this point in time back in, let's just say, early mid-February? Market S&Ps are putting in new all-time highs. Traders have FOMO mentality. There's a high level of financial risk. All it's going to take is one little catalyst, one bearish catalyst to derail markets and cause a sell-off. Well, we know, of course, that happened. Okay. But in February, notice how the Bollinger Bands are relatively narrow. So if you look at the upper and lower band or the outer bands, they're close together, they're parallel, and that tells us that we're in vol contraction. So we're in a low volatility market environment. Now here's where the slingshot starts to get pulled back. Okay, so just imagine that hand pulling the slingshot back. Price rotates down into the lower band and breaches it. Okay, this is the beginning of the slingshot, but one other thing has to happen simultaneously. And that is a transition from vol contraction to vol expansion. How do I know that? Look at the outer bands. They simultaneously diverge when price breaches that lower band. Those are the two things that have to occur. And really it's three. There has to be prior vol contraction. So you have to previously have narrow outer Bollinger Bands. Okay. You have to have a breach of the lower band and a simultaneous divergence of the outer bands. This is where the slingshot gets pulled back. We now have a high probability of a sell-off in the asset, in this case, the S&Ps in the broader market, right? Okay, S&Ps lose over 30% just a few weeks. That creates buying opportunity and demand. Buyers come in, S&Ps catch a bid, and price returns right back up to that initial level, up around that 3,200 level. So, a couple things. When we look at this example of the slingshot in reference to the underlying catalyst, Okay. This pandemic was still in its infancy. We really had no resolution. We didn't have viable treatment options. We didn't have a vaccine. We had global economies shutting down, quarantining, and it would unfortunately go on to get much, much worse. However, that's not what the price action in the market would have you believe, right? The market was right back up by early June to that level in the absence of a resolution to the catalyst. Now, the other thing I'll point out, notice how when the price returned right back up to that level in early June, see that pullback, that mean reversion to the center band? Okay. So while I essentially coined the slingshot, okay, I didn't make up the contrarian approach to this. Okay. There again, this is largely how your highly successful long-term traders and investors like Warren Buffett, Carl Icahn, George Soros have done so well. Okay. They are taking advantage of the panic selling. They're buying at lower prices. Excuse me. And they know when to get out. So this is probably just profit taking up back up at this level. And then notice how the S&Ps kind of go sideways for a period of time, over the next 3 or 4 weeks. Okay. There's that buying pressure is dried up because there's now profit taking. Okay, of course the S&Ps would go on to make a much more extended upside move, but this is where the profit taking is occurring. We'll look at some more charts. This is an individual stock, Apple. Again, this is a past chart. I want you to start to kind of be able to see the slingshot in action here. What's happening on the left half of the chart? Apple's in a strong uptrend. Okay, this is a daily chart. So it looks like for a month or two, right, it was in a nice, strong, well-defined uptrend. Until here, we get a rotation down to the lower band. That first candle just perfectly kisses that lower band and then reverses. For any of you who are candlestick analysis traders, right? You'd recognize these as two bullish reversal candlesticks. And I would venture to guess that a lot of traders got trapped here. They thought, okay, we're trading around a 2 standard deviation level from a 20-day average. We have two bullish reversal candles. This is just a brief retracement in the broader uptrend that's then going to resume, but it didn't. Because what happened? As a slingshot trader, we had previously had parallel bands. We had an uptrend. And when price breached that lower band, there was a simultaneous divergence of the outer bands. And there's the sell-off. So Apple sells off right into a key support level down around 168, attracts buyers who come in and drive price right back up to that initial level where the sell-off ensued. And once again, notice how Apple started to just kind of trade sideways there for a week or so. Okay, profit taking. And then it went on to make a more significant upside move. This is actually an extension of the slingshot strategy. And in the interest of time, we won't be able to dive into that, but I will be telling you how you can learn more about this. Okay. That creates a whole nother opportunity as it relates to the slingshot. But for now, we know where the profit taking is. And if we came in here and bought, right, we know where to take our profits. Here's an example from back in 2018 on the QQQ. Okay, what do we see on the left edge of the chart? Okay, again, applying it to the psychological curve. We have markets putting in new all-time highs. We're kind of approaching the tail end of this decade-long secular bull market. Price hits the upper band. Probably a lot of traders jump it in there with FOMO mentality. Then price rotates and breaches the lower band. Okay, previously we were in vol contraction, low volatility environment, parallel narrow bands. When the breach occurs, simultaneous divergence to the outer bands, there's the sell-off. In fact, we had like 3 or 4 mini slingshots embedded within this major slingshot, but that eventually attracted buyers who came in, scooped up shares of the Qs, and drove price right back up to that initial volatility expansion level. Does it work on intraday time frames? Of course, because it's all psychological. It's all supply and demand. This is a 5-minute chart of AMD, Advanced Micro Devices. What do we see on the left edge of the chart? Right, AMD is just in a relatively narrow range. It's bouncing between the upper and lower band. That was one of the approaches we looked at earlier. Okay, that would have worked out, fairly well for a few times until it didn't. Okay, we get a breach of the lower band, divergence to the outer bands. There's the slingshot, creates buying opportunity, price returns back up to the initial volatility expansion level. So we've talked about how to identify when the market's likely to sell off, right? When it's vulnerable to a sell-off, it just needs that catalyst and that shift in supply and demand. So you're probably wondering, how do you identify the buy zone? And this is arguably the most challenging aspect of the slingshot strategy, and one that I struggled with for a long time, because the trick is really to identify when the band is overextended and ready to snap back. Okay, and so I would use different approaches, like candlestick pattern analysis, or a key support level, or waiting for some degree of confirmation that a upside reversal was taking place. But I was finding that I was often missing a lot of that upside move. Okay, because markets can move quickly, especially when we're in volatile market conditions. So I ended up spending over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. And I ultimately got this formula dialed in that I had to configure to work across all time frames. Okay, because again, I wanted to be able to apply this to day trading, to swing trading, to longer term position trading. But I also wanted it to be applicable across different asset classes. Okay, so not just for the S&Ps, not just for the NASDAQ. I want it to be an adaptable algorithmic formula that can reliably forecast market trends. And the result is a tool that provides accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. So that means if you're trading off a daily chart, you have up to 3 days of advance notice of a forecasted directional trend. I mean, how powerful is that? Okay, you know the exact price to get in, and I'll show you how to do this. But when you formulate the right combination of momentum and indicators and combine them with volatility studies and price action setups, you can actually accurately identify buy and sell signals at the outer bands. And this is what I built into the indicator called Trade Trend. So Trade Trend gives us accurate buy and sell signals up to 3 candles in advance of the trend. It can be used as a standalone. Okay. It not only works with the Bollinger Bands, it can work with other indicators, and it can work as a standalone. Okay. On our session today, the goal is to show you how you can apply this to just one powerful strategy, the slingshot. But it uses a proprietary momentum algorithm that reads the market in real time. It includes a trailing stop algorithm to help lock in profit. So when you get into a successful trade and you're wondering, where do I get out of this? Okay, the algorithm will gauge the market in real time. It'll look at the volatility, the average true range, the price action of the asset, and give you an accurate stop loss level to lock in profits. It can help forecast short-term and long-term trends with astounding accuracy. It works with any asset class, so equities, ETFs, futures, Forex, even crypto. It allows you to screen for trades, so you can scan for buy and sell signals in advance on any time frame. I love using this indicator for my directional options trade, so I do a lot of my trading in the options market. For any of you who trade directional option strategies, you know they're very time critical. You've got to be spot on, right, to be successful. And so you really need a powerful indicator to help you do that. Trade Trend helps do that. It doesn't repaint. So what that means is that when you get a confirmed signal on your chart, it is set in stone and it's there, and it's not going to change on you after the fact like a lot of other indicators do. And that's often the reason why when you look at an indicator on a chart in hindsight, it can look really good. And you think, wow, if I just place a trade at all these, buy or sell signals, I'd be fabulously wealthy. And then you go to use it in the live market and it doesn't perform the way it looked in hindsight. And this is often due to repainting. It has built-in protection to avoid whipsaws. It can help capture most of the trend before it reverses. It's designed to limit losses and let profits run. Yeah, there are always going to be losses. That's of course, our biggest overhead in trading. We want to minimize those as much as possible. The algorithm is designed to provide a positive expectancy, limit losses, and when you get into a successful trade, let those profits run. It can be used with any other indicator or system for added confirmation. And again, we're applying this indicator today to the slingshot strategy and help us trade without guesswork. Again, we're going to try to overcome that, what we looked at in the psychological curve, all those drawbacks that we face using intuition and emotions in our trading and investing decisions. Now, I mentioned I would give you a handy little trick to help eliminate losing trades. Now, we can't eliminate all of them, right? But this is actually programmed into the trade trend indicator. And it's a highly underutilized order type. In fact, I've looked at the data amongst some of the biggest retail broker dealers out there, and most often people use market or limit orders. And not that there's anything wrong with that, but if you're going to take a directional trade, why not use a buy stop or sell stop order? Okay. Because if let's say you are forecasting ABC stock to go up and you enter at the current price using a market order, or maybe you want to try to get a slightly better price and you wait for a pullback and you use a limit order, but then ABC stock never goes up, it just sells off. Well, you get into a bad trade right off the bat. Whereas if you use a buy stop order to enter long trades, okay, so this is where you just place an order slightly above the current market price. You need to actually have follow through. So oftentimes you're in a successful trade right off the bat, not a losing trades. And then you can do that conversely with a short position using a sell stop order where you place the sell stop just below the current market price. Then you need the follow through. If that follow through doesn't occur, then you simply don't get into a trade. And this can actually help improve your consistency and increase profitability. Okay, again, that's built into the trade trend indicator. Now, as I mentioned, I'm going to share some real world, real money results. And I do so not cherry picked. I picked the worst market conditions. Okay. So this is from early 2020. It's now, of course, Schwab. They've acquired TD Ameritrade, but at the time, TD Ameritrade, this is my brokerage statement from back in February when that initial sell-off started. So this is really just the last week of my trades. Okay. I was using the Slingshot. I was using the trade trend sell signal. Okay. And began shorting positions to take advantage of that sell-off. So I wasn't panic selling. Okay. I was putting on small positions though, because there was still, a lot of uncertainty, right? So I was mostly in cash. I think I was like 90% in cash at this point in time. Okay. But I was trading relatively small positions. Okay. And by the end of February, so that last week, booked over $13,300 in profits. Now, when March rolls around, okay, again, I'm just using the Slingshot, waiting for that trade trend buy signal, which showed up in March. I was still being conservative, but I booked profits on my short positions, started to unwind those, and then transitioned to long positions. Still just doing, here 1, 2, 3 contracts. Okay, but I was putting on more positions. And by the end of March, booked over $27,000 in profits. So between February and March, when an unprecedented number of hedge funds were folding, retail traders were taking heavy losses. I booked over $40,000 in profits just using these two things, just using the Slingshot and the trade trend indicator. Now, I can't guarantee anyone will replicate these results. Okay. What I can guarantee is that that's exactly how I accomplished this with those two things. Okay. The Slingshot and the trade trend indicator. Now, this can work in any market, any time frame. You can use this with any size account. Those are all decisions that you make, right? That you have the agency to decide what asset, what time frame, how much of my hard-earned capital do I want to put at risk. Those are all your decisions. Okay, this can be applied to any of those. And it gives us predictive buy and sell signals before the move occurs, up to 3 candles in advance. So again, that means if you're trading off a daily time frame, you have up to 3 days of advance notice. You'll get that buy or sell signal, okay? And it will give you an exact price as well as the order type. Okay, so it might say buy stop at X price. Okay, there's your forecast. Doesn't mean jump in right there with a market or limit order. It means place your order with your broker and wait for the follow through. If you're trading off a 5-minute chart, you have up to 15 minutes of advance notice with the trade trend indicator. And it's forecasted every market crash and rebound in the history of the market with 100% accuracy. Again, bold claim. I'm going to let you know how you can get this indicator for yourself on your own charts in just a minute. And once you have it, go back as far as you can on your chart. Look at every black swan event. We're going to look at some of those in just a second. Market crash, bear market, you'll see a trade trend sell signal that forecasted it. Look at all the rebounds. You'll see a trade trend buy signal that forecasted it. Here's some examples. This is the flash crash of August 2015. I'm keeping the Bollinger Bands on here because I want you to see the Slingshot as well. So this is the S&P 500 index. It's a daily chart. You can see that we're in a ranging market in May, June, July. August 15th, trade trend flashes the sell signal. but nothing's really happened. We're just back down at the lower band. Shouldn't price just bounce right back up to the upper band like it's been doing the last few months? Nope, we got 1 day of advance notice of a market crash. We then got a buy signal in early October when the S&P's double bottomed and then ultimately rebounded. And you can see the slingshot there, right? You see the slingshot. The '08 mortgage crisis. Okay, same thing. Markets, low volatility conditions. Bollinger Band's relatively narrow. Not much is going on. In fact, it looked like we had a little bit of a downtrend there on the left edge of the chart. It looked like it was reversing, going back up. We started to make a series of higher highs and higher lows. May 21st, trade trend gives us a sell signal. Literally 3 days before the markets lost over half their value in the second half of 2008. Then gave us a buy signal in late November before the markets rebounded. Let's go back over 2 decades to the 2000.com bubble. See the slingshot? We have the converging outer bands. We have price breach in the lower band. We get a trade trend sell signal. There's the bubble bursting back in 2000. We also got a buy signal in late September, early October before the markets rebounded. This is the 2022 bear market. Okay, once again, okay, we're at the tail end of a decade-long secular bull market. S&Ps are putting in new all-time highs. People have FOMO mentality. They're buying in. As a trade trend indicator user, you wouldn't have done that because right at the end of December, trade trend flashed the sell warning. Okay, literally a couple days before the market crashes. This is the recent 2025 tariff crash. How did it do? The S&P 500. Okay, there's the sell signal in February. S&Ps haven't sold off yet. We're just in a well-defined uptrend, making a series of higher highs and higher lows. Literally gave us a day or two of advance notice. We then got 2 more sell signals on the way down. Okay, there they are. I just threw the Bollinger Bands on there so you can see the slingshot as well, right? On the left, you got the converging narrow parallel outer bands. Breach of the lower band, divergence of the outer bands, sell signals. Trade trend gave us a buy signal literally on the day that major rebound occurred. And notice, right, S&Ps are right back up to that initial volatility expansion level. I actually traded the tariff crash. So this is right out of my Thinkorswim account. Traded some E-mini S&P futures, actually the micros. Okay, traded the slingshot, used the trade trend buy and sell signals on the MES, booked over $40,500 in profits. So guys, virtually every system will produce winning trades if you can stick with it long enough. But the problem is they don't keep you out of the market when conditions are not favorable and you end up giving back your profits on the losing trades. Okay, we're here to help change that. Okay, again, this is real world, real money results. I do a lot of futures trading as well. This is only using the trade trend indicator. Okay, so I mentioned you can use it as a standalone. It's exceptionally powerful when you apply it to the slingshot. But these are just futures trades I placed just using the trade trend indicator by itself. So full transparency, I still have losing trades. You can see those in here, right? But I want to point out I keep those relatively contained and let my profits run, and the trade trend indicator helps me do that. Book over $8,000 in a single day with as much as $27,500 in open profit. Okay, I wasn't doing anything crazy here. I was literally just trading one contract. One contract, that's it. This is, again, a real world, real money example right out of my personal Thinkorswim account where I traded the slingshot and the trade trend indicator together. Traded on the way down, on the way back up in just 3 futures markets. Over 26,600 in a single day with over 115,000 in open profits. So again, I can't guarantee anyone will replicate this. What I can promise you is, number one, I want to help you have days like these. And I'm going to give you access to the exact indicator I've used to achieve results like I've shared with you today. So while I can't guarantee your success, I can guarantee that I will give you this exact indicator. So I'm going to let you know how you can get it in just a second. Okay, but it's not a redacted version. It's not a basic version of trade trend where I'm using a souped up pro version that I'm never going to give you access to. I'm going to give you access to exactly what I've used to accomplish this. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. Okay, I reveal every one of my special indicators, every technique, every strategy, like I've done today on the session with the Slingshot, that make profits like this possible. Okay, so I'm going to walk through what you're going to get, because not only do you get the indicator, it comes with a whole lot more, including more education. Okay, I love doing these events, but probably the biggest frustration is we only have an hour together. And so we're limited there, but to overcome that limit, I'm going to let you know how you can learn a lot more on top of what you have today with the Slingshot strategy. So I'll show you how you can get 12 months of trade trend for whatever asset class you like to trade: equities, ETFs, futures, Forex. You get exact entry and exit signals, so you're never guessing the correct price to get in or the forecasted direction. You're also going to get live interactive strategy sessions with me on a weekly basis. So we meet with our members at Altos every week, Tuesdays at 7 p.m. Eastern. Okay, I'll be giving you access to those as well. I host those, and we walk through different strategies each week, like we did today with the Slingshot. You're going to get members area access for all the replays and recorded training sessions. So again, I'll let you know how you can do that here momentarily, but you'll be able to go back and watch all of our past sessions that we've been doing for many years. And there's a whole lot to learn beyond just the Slingshot. You get support and coaching from me on these sessions on a weekly basis. We do a lot of education around trade management, and we teach different tactics and strategies to adjust bad trades and mitigate losses, and even in some cases take bad trades and turn them into net profitable outcomes. Okay. I share with you on our weekly sessions what I'm watching in the market, often what tickers I'm trading at the time. Okay. Oh, this is all designed to help you cut the learning curve, okay, and start trading with more confidence and more consistency. And you can literally start now. Okay, so I'm going to reveal a few more things that come in the package, and then time permitting, I'll try to take a few questions as well. So again, you get the 12-month subscription to Trade Trend, to the indicator. Okay, we normally retail that for $14.99. You're going to get the weekly live strategy sessions. That's a retail value of $550. You're going to get coaching from me on a weekly basis on those strategy sessions. My personal coaching typically starts at $19.97 and goes up from there. But again, you'll have direct access to me on a weekly basis. You get exclusive invitation-only Facebook group access to our private Facebook group of around 900 members. You get the whole trade management and trade adjustment curriculum. Okay, this is online. You can watch it at your leisure. We normally retail that for $900. And ultimately learn to trade equities, ETFs, futures, Forex, options, whatever market you're interested in with consistency. And of course, you can't even put a price tag on that. But there are two bonuses that are going to come along with this. Bonus number one is my top 2 weekly trade trend picks. So as you get set up with the indicator, get up and running, and you're kind of practicing and learning to use it, learning the ropes, I'll be sending you my top 2 picks. So I go to work every Monday, do all the legwork, the research, pick out my favorite 2 trade trend picks, whether it be a buy or a sell signal for that week, and I send them out to all of our Trade Trend members. Okay, those go out by email and by SMS text message. You're going to be getting those. We normally retail that service alone at $5.95, but it's a bonus as part of the package. You're also going to get my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that walks through different tactics to mitigate risk and even in some cases eliminate it from your trades. We retail that ebook for $97. That's also yours as part of the package. So the total retail value on this package is over $5,000 if you went out and bought all of these things from us individually. We are knocking 90% off the retail price for today only. So you can literally get all of this for $4.97. It's pennies a day. It's an incredible deal. And for that reason, we do limit this to 25 seats. You can still get any of these things from us after those seats are scooped up. It will go back up to the retail price. So if you want that 90% discount and to claim one of those 25 seats, for an incredible steal, you just need to go to altostrading.com/slingshot. Okay, you can claim one of those seats at the 90% discount. You get everything that you see here on the screen. You're also going to get to select which platform you want the indicator on. We offer it on a multitude of platforms, including Wealth Charts, TradingView, Metastock, NinjaTrader, Thinkorswim, and TradeStation. So once you claim one of those seats, you will then select your platform and we'll get you all set up and running. Again, you're going to get another bonus, our professional trading series online course, which is over 10 hours of content covering some of our best strategies like we did today with the Slingshot, in addition to the 2 weekly top trade trend picks. This is what the alert looks like. Not only do you get the alert for either the buy or sell signal, the suggested entry price, the order type to use, your profit targets, your stop loss levels for the stock or ETF, you're going to get a supplemental option alert. So if you prefer to trade the option in lieu of the stock, that's totally up to you. We provide that as well. This service is, but on its own, is done incredibly well. Okay, this is just a snapshot of part of our track record. These are typically short-term opportunities, okay, that play out generally within a week or less. Okay, in the interest of time, I won't go through all the testimonials that we receive. We do receive thousands of testimonials from our members who rave about the trade trend indicator, tell us about how it's just turned their trading around like they never could imagine, right? It's just made all the difference to them. And I want you to be my next success story. That's my hope. And that's why I really do this. I obviously could keep all this stuff to myself and do well with it. But trading's a lonely endeavor. So I love teaching. I love developing tools that I can see work for other people and then receiving that positive feedback. That's really why I do it. We do have a guarantee. So if you don't earn at least the cost of your membership feedback, and again, you're getting a 90% discount in the first 90 days, we're going to give you an extra year of the trade trend indicator on the house. Again, that's a $1,499 retail value. No questions asked. Even if you just paper trade, which we encourage you to do, even if it just sits there and collects dust, which we hope it doesn't do, just shoot us an email. We'll comp you an extra year. Okay. We want to give you ample time to be successful with this. And we don't want to rush you to do that. Okay. I'm going to go ahead and open it up to questions. So I have a few minutes to take questions. I will give you our contact information as well. Our email is support@altostrading.com. Our toll-free phone number is 800-895-9348. If you prefer, you can place your order over the phone, but these seats are going to go very quickly at that 90% discount. So I would urge you not to try to wait in the phone queue. altostrading.com/slingshot is the link that you can quickly claim one of those 25 seats at that 90% discount. But if you ever have any questions, we're big on customer service, customer support. We have a great team that's here to help you. We'll get you all set up today in the members area with your indicator and have you up and running very, very quickly. Again, I'll throw the package up here and everything that you get at that 90% discount. And then if you have any questions, please do feel free to put those in the chat. Let's see, XYZZ, XY123. I love that. I love that username. Asked, does the price get grandfathered or will it go up? Great question. So you are grandfathered in at the 90% discount. We never raise the price on you. We would never do that to any of our dear members at Altos. You're grandfathered in at the discount for as long as you remain a member. We don't lock you into any contracts. So yeah, that's is grandfathered in. Good question. Let's see, Namra asked what platforms are you using and what should we use with your indicators? Yeah, so good. That's usually one of the common questions. So, and of course I covered, so maybe you put that in before I address that, but we do offer it on Wealth Charts, TradingView, NinjaTrader, Metastock, Thinkorswim, and TradeStation. So you get to select from those platforms. I personally, I trade through Thinkorswim. My hedge fund is held at IPKR Interactive Brokers. We don't currently offer the indicator on Interactive Brokers, but I will use it on Thinkorswim, and then I do place trades in other platforms based on the signals. So good question. Let's see. Another question, do you have a trade room that we can attend? Yes, in fact, I do run a trade room. I just recently launched a trade room back in October, and we just periodically open up membership to our trade room. If you're interested in joining our trade room, we meet twice a week on Tuesdays and Thursdays, and that's from 2 to 4 p.m. Eastern. I'd urge you to reach out to our support team, and they can help answer any questions on the trade room for you and get you set up if you're interested in joining that. We don't open up membership to that all that often. So here's our contact information once again. Corinne asked MES profit per year, that one. Yeah, yep. So the results I shared on the MES where I did the slingshot this year. Again, I used the trade trend sell signal. I used the slingshot strategy, traded directionally on the sell-off and on the rebound. That was from this year. Yes. Let's see. Jay asks, so the slingshot works for day trading. What's the best time frame? Yeah, so the slingshot, again, it's really all psychological based and it's really built around supply and demand. So the same methodology, same principles apply to intraday trading as well. Um, it is still important to consider the asset and consider the time frame, right? So on an intraday basis, right, you're not going to have the accuracy in terms of a rebound that you would for say on the S&Ps or the Nasdaq, which we all know over the long run have an upward trending bias, right? And so that's why we can make the claim that the slingshot works out 100% going back to the dawn of the market, right? By evidenced by the markets continuing to put in new all-time highs. But it's still remarkably accurate on intraday timeframes because it's all built around that psychological principle of supply and demand, panic selling, and fear and greed. Let's see. Just kind of scrolling through here. I'll get the package back up. Let's see. Question, I trade only futures if we don't like is it refund or no, thanks. Yeah, we'll work with you. Again, we have a 90-day guarantee. So we want you to obviously give it time. Um, Practice as much as you can. Okay. And we have trade trend members who have been with us for many, many years. In fact, I had a guy come up to me. I think it was last year. I was doing a keynote speech at one of the International Traders Expos down in Las Vegas. When I was done presenting, he came up to me and said, "Hey, I just want to shake your hand." And I thought he was complimenting my on my presentation. But as it turned out, he said, so I thanked him, and he said, "Well, no, you did. It was a great presentation, but I wanted to thank you because I'm actually already a trade trend user, and I have been using the indicator exclusively over the past year, and I made over $1 million with it." Now, he didn't tell me what his account size was or any of the details, but he informed me that he made over $1 million with it. And he's been using it for many years. In fact, he was starting to get his daughter into trading, and she had just started to use it. She had no prior trading experience. And he informed me that she made 50 grand that year using the trade trend indicator. Pretty cool. So, you know, like anything else, there's a learning curve. Get used to it. Take your time. We'll work with you. I do a lot of futures trading. So I use the trade trend indicator in the futures markets, okay, both for intraday and uh, swing trading off daily timeframes. Okay, so I want to save enough time for the next speaker and give David time to transition. So I really appreciate everybody being here today. I want to welcome all of our new Trade Trend members. Again, that link is altostrading.com/slingshot. David did put that in the chat for you guys. Thanks, David. So you can just click right out of the chat and hop right on over and claim one of those 25 seats, which are going very quickly. We do have a few seats left. So if you want that 90% discount, don't wait because it will go back up to the retail price.